Hi, everyone, and welcome to the Wall Street Blockchain Alliance Crypto Roundup for July 19th, 2024. I'm here with my amazing co-hosts, David Brill and Ron Quaranta. I'm Josh Klayman, and we are coming to you live or recording, depending on how you're watching this. Before we get started, and there's a lot to cover as always, we have a few traditional disclaimers. One, nothing that we say here is illegal, accounting, tax, investment advice or other advice, really. These are just our thoughts. And also, everything that we say, these are our personal views. Some of them may still be being formed. We have not necessarily thought through everything that we may end up saying. And nothing that we say, importantly, is intended to represent the views of either our employers, our clients, or really any other person. So with that, we're excited to get started. And I'm going to kick it off to you, Ron, and say what's going on with the markets. Again, not investment advice, but what are you seeing in the markets?
Yeah.
And also this is to you, David, as well. And what's going on with the jobless claims? I never thought that I would be really psyched to learn each week what's happening.
There's so much going on, Josh, and thank you so much for the intro. It's great to see you both as always. David, I'm probably mangling the data, but I did see some of the jobless data that came in as net positive for the idea that the economy is slowing down, and then it's really looking at least at a minimum of one interest rate cut this year, probably September, maybe another one later on in the year. And interesting, in the backdrop of all of this, a lot of the indices took a beating this week, and tech certainly has taken a beating. We can certainly talk about the outage this morning, David, that's really beat things down. But I think the thesis that, look, the economy's slowing down, the U.S. economy in particular is really strong, but there's this glide path to the economy slowing down that will force the Fed's hand. They always say that they're data dependent. So 1 month does not a trend make, but we're now into, I think, David, 3 months of, it kind of looks like things are slowing down. Which I think is a net positive for crypto, and I think especially after the summer. But David, would love your thoughts, buddy.
Well, look, I think from a jobs perspective, they've been slowing down for longer than that. We have to wait till they refine the numbers every month, and then say, oh, by the way, we're off by 100,000 jobs. My kind of view is really, since the beginning of the year, the white collar jobs have really slowed down significantly. And I think these jobs that we see the jobs that we're seeing are either, second jobs, sort of consultant jobs, and also a lot of government jobs, which I still can't understand why the government's hiring so many more people. Whether it be state or federal, it feels like we're fully loaded in government hiring. But needless to say, I think the numbers really probably show that we've been slowing down since January. So I think what we got today or this week isn't too surprising. What I do think is interesting, though, and we'll segue into the campaign, is that you're now starting to see people react to what former President Trump's comments are on the economy and having a direct impact. And so I think that's worth diving into, because I think yesterday when former President Trump made some comments about Taiwan, the market really took a little bit of a header because they were concerned about the semiconductor business, which is a huge part of our economy, and the majority of the production is done in Taiwan. So I think we may be back in that time when, former President Trump's comments can move the market positively or negatively, depending on what he's saying.
David, can we just build on that, Josh and David? Interestingly, looking at the economic data, there's a real risk, David, that, it's easy for me to say there's this kind of smoothing glide path. Things are slowing down. It's not a catastrophic collapse. But, the devil is in the details when you peel back some of the information. I think Bloomberg did a really good job of this. They look at things like delinquencies, delinquencies on auto loans, now delinquencies on certain credit card debt, balances on certain credit cards. I think it really is a fine line. David, are you concerned that, if those escalate out of the Fed's control, that suddenly becomes a very hard landing, which is good for no one?
Yeah. And look, we've talked about this on our podcast before.
Yeah.
I don't think the sort of middle 2/3 of America is in a soft landing between car repossessions, credit card delinquencies, like the cost of food is still, like, I think this is a really important point. No matter where you are on the financial spectrum, the cost of food has gone up dramatically. And if you're making less money, it's impacting you more and more. Especially like, a family of 4 or 5 who are struggling or at a lower income rate. Like, I've literally have been in New York in a grocery store and then been in Florida to buy something, and the price in New York is like 33% higher than the price in Florida, and that's not including the fact that they've also gone up quite a bit. And so I really think it's an underreported story, and the impact of it is underreported or underappreciated.
David's eating at Nobu less now, gosh, and when he gets to New York City. It's just, I get it.
It's all those Rayo's meals, getting in the frozen department. But all kidding aside, it's hard to get out of the grocery store for under $100, even if you're buying just a few things.
Yeah, and I don't recall if it was you guys or one of the two of you who mentioned this, or whether I heard this somewhere else. I feel like it may have been one of you who said that now there's evidence, or data, I should say, not necessarily evidence, that shows that people's whatever they may have received from payments in respect of COVID and other sort of stimulus payments, I should say, that those are depleted now, and maybe that's why we're seeing that.
Yeah, I think it was in one of our live streams, Josh, and I think it was a report that we had seen. I want to say it might have been a Deloitte report or one of the big broker firms looking at flow of funds and even things like M1, M2, M3, what's sitting in checking accounts, what's sitting in savings accounts. And when you look at people encountering these prices, look, a used car loan is higher than a mortgage rate. And a lot of people in this country are now dealing with, what do I do? How do I buy a car if I need a car? How do I pay a mortgage if I need to pay a mortgage? Even the real estate, the real estate aspects of it, inventory is increasing. I think we talked about it last time. We're up to 8 or 9 months of real estate inventory. And I think the high in our lifetimes was 12 months of real estate inventory available for sale that no one was buying. And that was right before the 2008 crisis. So again, it's that really fine balance of things are slowing down, which is good. They'll cut interest rates, but that can go south real quick if the Fed's not careful.
Yeah, look, I think it's definitely problematic. I mean, and look, Ron's now paying like $5,000 a month for his Rolls, auto loans. So
I knew these would come back to me. These jokes, Josh.
Hey, you weren't going to get away with it too long, Ron.
I know, brother. I know.
You've been saving up for that all week, David.
No, it just came to me. I was trying to think of a fun car for Ron, but I don't see him driving a Lambo SUV. It's not
Bentley?
Yeah, I'm not I'd go Bentley. I don't think I'm a Lambo kind of guy.
Yeah, Bentley or Rolls Royce seem more appropriate to you.
Yeah.
Although
my wife's going to kill me for not having one now. Thank you both.
I will tell you that there are a lot of Lambo SUVs where I am in Fort Lauderdale, and I have to say I didn't appreciate that it was a Lambo at first. I just thought it was like, another car maker. Then I had to look a little closer, and I'm like, oh, Lambo makes SUV, and I was kind of like, if you have a Lambo, you should just have the regular one. Why would you have an SUV? But
yeah, it seems almost like an oxymoron. Apologies to any Lambo drivers who are listening.
I thought the same thing, and I was like, okay, so this is a thing. But anyway, all joking aside about that, I do think that we have these, we have, I think, a real structural issue for people in the lower income brackets. And I think that, it may play out in the election in a way of, not that people will think that, the Republican Party is the answer to that, but they may say, maybe we need something different than what's going on now. It's just an interesting dynamic that I really feel has been tamped down and not fully reported because of the election.
It's interesting that you have that you just said that, kind of, because it helps segue into what we may want to cover now or may want to cover later. But really, that kind of populist feeling or other types of views that many people believe that the appointment by, or the naming by former President Trump of Senator Vance of Ohio, that may tie into. So shall we talk about that for a little while?
Why not?
Sure.
Let's dive into it. David, you want to start?
I will. So, I think one thing also is that, I think JD Vance is 39 or 40. And one of the things you have to take into account is like generationally, he's part of a generation that is familiar with crypto, that interacts, with crypto payments online, things like that. So it's more natural to, that cohort than it is to, Biden's cohort or Trump's cohort. So I think that's one interesting thing. And look, I think that you've heard a lot of positive commentary coming from, the VP and from the Republicans on crypto. And then I think the last thing to remember is, JD Vance was a VC person for a couple of years, knows a lot of the people in Silicon Valley. And so I think that his appointment is viewed as really positive for the tech industry. And I think the tech industry is returning the favor by making large donations to the campaign.
So may I chime in on that a little bit?
Yeah.
Sure.
So now this is not firsthand knowledge, and actually I should just give a shout out to Dina Ellis and also Adam Goldberg and Ron Quaranta for their quite amazing policy podcast this week on this topic, because I learned a lot. But I think based on that and based on some subsequent research that I have done, which may be false, okay, so just data, not necessarily evidence. I think the question about whether Senator Vance is good for tech generally is an open one, right? So my understanding is he was born in Kentucky, right? Moved to Ohio, grew up in perhaps some less prosperous areas, wrote Hillbilly Elegy at some point, went to Yale Law School, as did his wife, went to Silicon Valley and was mentored by Peter Thiel, right? And worked in VC, then returned, as I understand it, to Ohio and began making VC investments in areas in Ohio that hadn't previously been the focus of VC investors. And so my understanding, which could be wrong, is that he generally does not favor extensive regulation, that his office has been quite active in support of digital assets, and so potentially very good for crypto. He also has made some pretty big statements, notwithstanding the Silicon Valley ties, about big tech, right? And for some of the names that shall not be named, but the very large players, I believe that he's called for the breakup of at least one search engine, right? Major search engine, and also has been critical of some social media platforms, including for reasons in both cases of potential election manipulation type or political type things. So in the case of the social media platforms, I think that has been largely due to a view by some that maybe certain stories were suppressed. And in connection with the search engine, I think the idea was that maybe there might be some kind of political priority for certain search results. So what's interesting to me is, yes, I view him as, potentially, something meaningful for crypto and for a lot of other things as well. But also, he has spoken publicly and said that, he has applauded Federal Trade Commission Chair Lena Khan, which many have been quite critical of. So I think as I see it, it's a balance. My impression is that a lot of what he brings, other than fresh take, and certainly, as you said, a generational perspective, and certainly intelligence and all the other things that we would expect, but also is that, and this I got from Dina, is that if you think of Ohio and all the car manufacturers and the unions, right, and the auto workers and stuff, that he really has a base that he's, particularly for swing states, might be useful in former President Trump's election bid. So anyhow, that was my around the world of JD Vance in a couple minutes.
I I agree with you, Josh. I find JD Vance to be a bit of a contradiction for a lot of the reasons you elaborated on. And, I really, kudos to him or anyone who goes back to their home state and kicks off VC investment in Ohio. Who would have talked about VC investment in Ohio, 3 or 4 years ago? But I agree with you. Like, being pro FTC Lena Khan, and this is not a personal judgment on the FTC chair, but really is discordant with, we should go lighter touch on regulation, which seems to be a populist thread, particularly for Trump as well. It'd be interesting to see, there's something to being pro crypto and saying that, but how does that get executed at the federal level, right? And a lot of this is dependent on who has the House and who has the Senate. I'd be interested to see the specifics of what a VP candidate who gets crypto because of that generational difference, what do they put forward? Does that automatically mean anti-CBDC? Does that mean he's more inclined that TradFi not be a bigger part of crypto and that crypto native should grow bigger? I would just love to see the details of it, if that makes sense. I don't know if you both agree with that. And it's early. Yeah.
Yeah. So I want to pick up on one thing Josh said. I think that his views, at least has been stated, especially around the social platforms and potential like tamping down of conservative views. I don't see that as inconsistent with supporting tech broadly, because I think there's been a view that the social media platforms I want to say this the right way, they may be a little tilted in one direction than the other, and that they may be focusing on a certain view of life and things and not having a more fulsome view. And I think that may have changed with, Elon Musk now running X. And so I don't see them at odds. I think the Lena Khan thing is interesting because I think her views have really slowed down the M&A market. And there's some M&A deals I think a number of people think should have gone through and shouldn't have been contested and were. But I think, like you said, Ron, the devil is in the details. But I think we could all think of a few quick moves that could be made in a new administration that would, unleash a lot of the, pent up demand to do business here. But, even though, Josh and I are really busy in our practices, we know people are on the sidelines now waiting to see what's going to happen in November before making a major move.
Let me go back to the FTC thing real quickly as well. His support of Chair Khan is interesting to me, given how poorly they've done in court. There was this really interesting Bloomberg broadcast, I think it was yesterday, and I don't remember who was speaking, so my apologies, that looked at these big cycles of antitrust concerns in government. And, going back to the Sherman Act before 1900, I think, maybe, or 1910 or something. But, in the 70s, it was like much more antitrust crackdown. And then in the 80s and 90s, Reagan came and there was this kind of, let big business do what it does. And his perspective was, depending on who wins the election, this marks that next turn where for the past 40 years, the paraphrase was, well, big companies have been able to do what they want. I don't know if that's necessarily true. When I see what's happening with the FTC, the economic argument that investors and consumers are being harmed seems pretty thin. So I'm always concerned about, well, then what is his support for this? What are the big companies doing outside of the, election issues that he claims that they need to be cracked down on? I'm not saying he's wrong. I just don't see the evidence of it.
Yeah, by the way, I should just mention an article that I read that I thought was really interesting. It was The Verge, and it was by Lauren Feiner and Alex Heath from July 16th. It says JD Vance is anti-big tech, pro-crypto. And that's where it really gets into the Lena Khan discussion, among others. And there's a quote that's attributed to him that says, I look at Lena Khan as one of the few people in the Biden administration that I actually think is doing a pretty good job. So that's a pretty strong statement, if accurate. But I do think, and just going back to what David said for a second, I agree. I don't think, and if I said this a little too harshly or something, I take it back. I don't necessarily think that, as you said, let me put it this way. I agree that I don't think it's inconsistent to say pro tech, good for tech,
Mhm.
and at the same time maybe say like not so great for big tech, right? Because I think maybe one of the differences and maybe one of the ways to reconcile, Ron, as you noted, this idea of less regulation with some of the other statements is just trying to break up perceived monopolies, right? Or other maybe not going as far as monopolies, but concentrations of power.
Yeah, and look, I think it's challenging. I think one element to the mergers that is challenging is how employees are treated. And I could see somebody from Ohio taking a look at the mergers that are being done and saying, hey, when it comes to employees, maybe we need a different model here. And it can't just be about wringing out synergies and just dumping, cutting jobs. And maybe there's a better way to do this or a different way to do this. So that's something that comes to mind, but I'm not sure what his position is vis-a-vis that. But I think that could be one area where there might be a view, especially coming when we say like from Ohio, that like jobs need to be preserved in some manner in these deals. But I want to add one other thing, just like a side note. If there was one monopoly that I would like to see dealt with, it is in the ticket prices. Like
Yes.
it is obscene to have to pay a third of the value of a ticket for a fee just to have the honor of buying the ticket. So I would say to anybody focused in that area that is something that should be revisited because that affects everyone. And I just think as free markets a person as I am, that has just gone way too far.
So, David, it's funny that you raised that. In that report I was listening to yesterday, apparently DOJ and FTC are resurrecting the Ticketmaster merger for possible antitrust violations. I don't know the legal mechanics of that or how that would work, but the data they were quoting corroborates what you're saying. Just ridiculous prices. And another example, now that we're going down the antitrust path, Josh, I'm really sorry, is interesting in the eyeglasses space. And I had no idea that Excelor Luxottica is the largest provider in the world, and apparently large enough to crowd out everyone else in the space, like Warby Parker. And the average price of a pair of glasses, no matter what the prescription or frame, is about $20. Full stop across the board. And this company is able to do 20x on all of them or more. So a lot of antitrust people have come forward, Josh, to the point of, why isn't the FTC investigating this? So yeah, I get, it's a point well taken, David. I understand.
Yeah.
I mean, just chiming in on the ticket sales again, I would just say to link it back to the digital asset space.
Yep.
Certainly that has been one blockchain use case that people have talked about and pursued, right? Because of the possibility of double sold fraudulent tickets.
Yeah.
Blockchain for tickets.
Absolutely. And like I would even go so far as to say is like I might not have an issue with what they charge like in the secondary market because you're paying them for that service to like list your tickets and have a guarantee in the secondary market. But the fees in the primary market I think are really problematic. So I'm fair and balanced on this.
You're generally fair and balanced, David.
But yeah, they're really high. So, but besides that, talking about what's going higher, by the way, is BTC has been making a rally lately. We're over 66,000 now, and thankfully, the German government has sold all of their 2 billion worth of Bitcoin that they had. And the reason why I bring it up is that, they did not sell it in a really orderly fashion. They literally were just like kind of dumping as much as they could on the market every day. And from what I've read, it's supposedly related to some regulation that the government has. But I think they literally cost themselves $300 or $400 million if they had just hired, a Bitcoin, asset manager to sell it in a more refined way. So the fact that we overcame that last week and today we've had a really strong day. It's been a nice recovery.
David, I feel like the German government dumping BTC. I feel like the Gox information about crypto kind of reverting back. I feel like the market's broad enough and deep enough where it's kind of absorbing those much better than it might have done 4 or 5 years ago. And everyone, some people get apocalyptic. German government's going to be dumping 2.5 billion, whatever it may be. Look for $10,000 price drop in Bitcoin. It feels that volatility continues to smooth out. And I think that's one of the lures for TradFi. I think that's why we're seeing more of that conversation. David, you and I talked about it at the Crypto Asset Working Group yesterday, and I wonder if that kind of smoothing out of the volatility is one of the things that brings wirehouses closer to being part of the ecosystem. So it's an interesting development.
Yeah, and what's interesting is I think there was over $1 billion of net inflow into the ETFs at the same time that the German government was selling all of their Bitcoin. So I think over the last 3 months, the volatility in this space has really been diminished considerably. I think the only thing that I do still see as being volatile are like weekends and holidays, and when you get close to numbers where there's a lot of leverage. And what I mean by that is there's a lot of leverage, and if you reach a certain number, positions will be liquidated. So I think when you get to those type of positions, and we're actually near one now around 66,000, where there's a lot of leverage positions, that's where you see some of that like immediate volatility and everything sort of going up or down depending on who's being liquidated.
David, why the weekends though? Is it the Asia market and the fact that they've got more liquidity venues that kind of participate? I get where you're going, and I understand your perspective. The weekends are a bit more volatile. I'm curious about the mechanics.
For one thing, people aren't sitting at their computers, like trading, or they may be working and they may not be checking on their positions, and it moves very quickly. And I think we've seen on a lot of American holidays big moves, one way or the other. So I think there's just a lot of that goes on, and because it moves quickly, and there is a portion of the ecosystem that's highly leveraged, they're subject to liquidation on a $2,000 or $3,000 move in crypto.
Yeah, fair point.
So
I'm wondering what's going to happen next week with Nashville. I think that's not necessarily on a weekend, right? It would seem to be in a week, but not investment advice, but I anticipate that we may see some hopefully positive moves in that regard.
Yeah, go ahead, Ron.
I was just going to say, obviously former President Trump is going to be speaking at the Bitcoin conference. I will not be there, and I don't think any of us plopped down $800,000+ to be sitting at the table, but it will be interesting to see what he talks about. There are others, Kathy Wood's going to be there. I mean, there are some really deep experts in this field who've been around for a long time. It'll be interesting to see their perspectives on what an administration change might mean for crypto.
Yeah, it's been teased that Trump is in favor, or that potential administration's in favor of holding some Bitcoin as a strategic reserve. And what's really interesting is that our government has over like 200,000 in Bitcoin that it's seized or acquired through different enforcement actions. So it would be interesting to see if those Bitcoins were put aside and held by the government and not sold, because that's been a little bit of an overhang on the market, along with Mt. Gox creditors finally getting some of their Bitcoin back after almost 10 years. So
I got to say one thing, Josh.
What?
I'm sorry?
Which is really shocking. I mean, good that they're getting some of it back, right? But like 10 years.
What happened to Mark Karpeles, by the way? Is he still in prison?
I feel like I just saw a statement by him about this, saying he was something like happy that people were getting something back. But maybe I'm mistaken. I'll Google it real quick.
Yeah. But I mean, David, to what you were mentioning real quickly, though, the devil's in the details of how a potential new administration, former President Trump's come out and CBDC is terrible, tool of the surveillance state. We won't have one, but we might hold Bitcoin as a reserve. And what would be the use of that reserve? I just feel like there's a lot of the mechanics that haven't been thought through. And I honestly think the U.S. government, in the short term, holding Bitcoin as a reserve might be a net negative from a reserve currency status perspective. I mean, I know that's a long-term game, but go ahead, David. I'm sorry.
No, that's really interesting. Well, ideally, maybe they'll allow a few other parties to custody crypto in the meantime, so it could solve that issue.
Josh, we should mention for everyone watching, thank you so much for chiming in. If you've got questions for Josh or David or I, please put them in the chat. Smart people like Josh and David will answer. I'll just read them. But it's good to have you all join us.
So, Josh, what do you think about the ETH ETF trading next week? Did you think we'd see one this soon, or like if you had looked in your crystal ball, what would you think?
I mean, I don't trust my crystal ball. I think it's like it's more like a magic 8 ball.
Yeah.
I mean, I think if anyone has listened to you, David Brill, with your siren song of the the timing, I think it would be pretty well placed. Again, not investment advice, just jokes. By the way, I just want to say, may I just say something that I think is a little bit funny that just happened while I was Googling. So I was Googling about about Mount Gox, right? As we were just saying. And so it's interesting how the news refreshes so that something looks like it just was, a month ago, right? And then you click on it and it actually was several years ago. So I clicked on this article and it says Mount Gox says it found 200,000 Bitcoins in forgotten wallet. And then I looked at the date, it's March 21, 2014. Do you imagine just discovering 200,000 forgotten Bitcoin right now? Just like,
yeah, it's a very different number today.
Yes, yeah, that'd be something nice to wake up to.
For sure. That's why I was like, what? It did? And then I was like, oh, 2014, 10 years ago.
So, Ron, what's your take on the uptake next week? What do you think will happen as an Ethereum ETF starts trading?
So I've got a couple of comments, David, as you know, and we talked about this yesterday. And for the record, Josh, and anyone listening, I have retired any crystal ball that I would use. I will never wager with David about anything. We will not be on Polymarket, and I will not take the other side of a bet with him. I think a couple of things. I mean, I think, look, is it good for the evolution of the market and TradFi's interaction with the market that an ETH ETF, several of them, S1s are in, and they've been approved and will trade? I think that's overall a good thing. I still think we'll see a net negative impact on ETH prices simply because the TradFi perspective will be there's not enough deep bench of liquidity like there is for Bitcoin. I think we'll see some inflows. I think people are going to look at one of the issuers still charging 10 times some of the fees that some of the other issuers are in. We might see a bump. I just don't think it'll be anything proportionately like the Bitcoin spot ETF was. And I think the other thing weighing it down is when we look at these big providers, David, or the big retirement funds or the big wirehouses looking at a new asset class, they're going to be looking at a new asset class that says, okay, Bitcoin ETF and now Ether spot ETF. And bluntly, that's probably it. And that's probably it for a long time. When you look at, the requirements around having a spot ETF, and I could be misquoting this, someone in the audience tell me if I've got it wrong, you need a developed futures market. None of the other cryptos that I'm aware of, and I could be wrong, has a developed futures market. You need market surveillance agreements. You need the kind of things that, bluntly, Bitcoin's been around long enough and Ethereum's been around long enough to have. Pardon me. And I think the bigger wirehouse is going to look at and say, you want me to invest in an asset class on behalf of clients that has 2 instruments. Why does that make sense? And I think there's still a long way to go there.
May I jump in a little bit?
Go for it.
So I would say, Ron, I agree with you about, the futures markets. Certainly we've seen, I believe that Solana, a futures ETF was applied for the CBOE very recently. And yeah, I think so that goes hand in hand with the spot ETF application in the US and also right before that in Canada for Solana. I would say definitely folks in different ecosystems are looking into it, right? And thinking about what next moves might be. Can't say more than that, but I think that's something to be aware of. I also think it's interesting. There's been some speculation just in the past few days that now that the U.S. markets are getting ready to have the spot Ether ETF that actually maybe in European markets, there may be Ether staking ETFs, right? Which clearly would differ from what's available in the US. And there's actually a Cointelegraph article about this, saying EU markets will pave the way for the first Ether staking ETF. And it quotes a CEO from one of the well-known crypto entities. And that article is by Zoltan Varday. It looks like it's from only 2 hours ago.
Not 14 years ago.
No discovered 200,000 Bitcoin or Ether or anything like that. But what's interesting also in this article is that the same CEO is quoted as predicting that perhaps the Ether ETFs will capture around 25% of the Bitcoin ETFs under management, and that we may end up, and those of course refer to spot ETFs, that we may end up with like a 75 Bitcoin, 25 Ether mix. What do you guys think?
Like David's hypothesis, gold and silver, Bitcoin and ETH. And I think in the aggregate, I think that in the long run, that kind of makes sense.
Yeah, look, I think these ETFs are super important for that portion of the market that just hasn't gotten comfortable yet using crypto exchanges or individual wallets and using DeFi. And so to have a place where people can get access to it in a way that they're comfortable with, I think it's important. I think it's overdue. And I think our ETF should have staking in it also, but that's not what the powers that be have determined. But I do think it's good. I think the more people who can, have access to it, the better. Because I don't feel like the whole idea of crypto is not that, certain people should have it and some shouldn't. And even though everybody theoretically could have it if they went on a crypto exchange, I think it is nice that people could have other options, in a form or wrapper that they're more comfortable with right now. And then hopefully in a few years, they'd all want to own it on a crypto exchange or just self-custody it.
David, I wonder, the three of us have read, and a lot of the folks watching have read about the potential SAB 121 changes from the SEC. Again, we don't know the details. We don't know which firms particularly or what the dynamics of those firms are. But, to elaborate on your point, it'll feel better if there are well-known, well-collateralized, well-funded, comfortable with compliance reporting and regulation custodians that are able to hold some of this. So maybe that's one of the catalysts as well.
And that would have been a nice move by the current administration to deal with, and to resolve, and not sort of have this, what we've been reading about. And Josh will jump in because I can see she was ready to jump in.
You can feel it.
Sort of potential ad hoc approvals of certain institutions and certain situations, that have been sort of opaquely discussed. But I know, Josh, you want to talk about this more. I just don't see why it's so hard to allow some of the big players to custody crypto. And I think it needs to happen soon.
So yes, David, you read my facial expressions properly and accurately. You didn't even need a crystal ball. So yeah, I clearly haven't been able to say anything, and I still can't say anything. But whenever this has come up, I have been aware of certain instances in which there has been individualized relief. So what I would just continue to mention, and this probably is all that I can mention, but I've been trying to say it for a while, which is just, I think we should, while there may be certain players, institutions, whoever they may be, who may have gotten relief, I think it's important not to overgeneralize what kind of relief there may be, because actually in some instances that relief may be relatively narrowly tailored. And I think one of the concerns relates a concern on the part of the regulator, and maybe one of the places where there is a pocket or area of potential relief is whether something is, quote, crypto in the administration's eyes, or whether it is more of a traditional security that is tracked or transferred using distributed ledger technology. And certainly the definition of crypto asset in SAB 121 is quite broad and intentionally so. But I think and certainly I don't know all the relief that's been granted. Only the regulator knows. But I think assuming broadly that it's just exempting certain types of institutions from any kind of SAB 121 restrictions from custodying what we know as crypto, that may not actually be the case in terms of a broad versus a more narrowly tailored exemption.
Josh, can I ask you a question? And I know you're kind of limited in what you can just talk about here. I'm almost surprised that some of the firms that might be getting some type of relief, whatever broad or narrow relief, are they prohibited from talking about that publicly? Are they not allowed to? I'm just curious about some of the players who you'd think would be able to say, hey, there's something we can do here. It all seems very quiet. Is that part of the requirement from the regulator?
So I can't speak
Sure.
certainly broadly about what requirements might be, but I would just say and this is my personal view, just as a person, is that in certain instances, I mean, there's clearly been a lot of, and rightly so, a lot of discourse in public, whether in Congress or from market participants or from we in the legal bar and others, being highly critical of the SEC, being highly critical of SAB 121. So it may be that in certain instances, perhaps some players have done a calculation that may be quietly going in and asking for narrowly tailored relief may be more effective than sort of going out and advocating broadly. Yeah. And that some folks may have, they just may have calculated that fighting the fight for everything and everyone may be less successful in their particular instance.
Yeah.
But again, I can't speak for anyone. These are just my thoughts.
Understood.
Look, the issue I have is that, and I respect, an institution should, do what's in the best interest of the institution and the shareholders, and that may be to seek, narrow approval for specific products they want custody. But ultimately, I don't know that on a holistic basis that some entities should get relief and others don't get relief. And I don't like the idea that, because this hasn't been handled as well as it could have been, that it's sort of requiring institutions to sort of go in on an ad hoc basis. I support getting the relief and I understand it completely. And my view of getting relief on tokenized securities is much different than getting relief on like custodying Bitcoin or Ether. But I think there's been an opportunity. I think this has been really highlighted that this was an issue, and I just don't know that it couldn't have been handled better. That we are where we are now, and people have to go in for ad hoc relief instead of a broader approach.
David, do you think it's kind of regulators picking winners? I know you and I have had this conversation many times, and I think we both philosophically don't like that possibility.
I don't know enough about who's getting relief and what it's for, but the feel of it doesn't feel great.
Completely understand. I'm sure every instance is different. I think sometimes though, if you think about, there may be instances in which some type of an asset that is tracked on or transferred on distributed ledger technology where there may be redundant records or other things like that, or other safeguards that could make a difference from what we see with quote crypto, right? And so I would say, generally speaking, I agree. It would be better to have like a different it'd be better just to not have,
Yeah.
not to have it, but
Not have 7.21.
Yeah, look, I think, Josh, I don't have an issue with a company who has a specific need going to seek relief. I mean, companies do that all the time. It would have been nice if we were at the point where that wasn't necessary. That's my point.
yeah. And so I agree. And I think also just importantly, and this is something that I think, others have pointed out as well, but this SAB 121 is not commission level guidance, right? It's a staff accounting bulletin. So it's really the office of the chief accountant that would be, my understanding is, the folks you would talk to, as opposed to something at the commission level, which would be, of course, much more broad, because it would be presumably the role of the office of the chief accountant to interpret this staff guidance.
Yeah.
That being said, of course, we all know,
Devil's in the details, Josh.
Yeah,
exactly, and of course, it's not like the commission isn't there. So, just thoughts.
I'm going to weigh on the optimistic side and say at least it's progress. I mean, a year ago, the three of us were talking about SAB 21 is literally going to make sure major financial institutions can't get involved in crypto, and there are some cracks in that logic. We'll work on progress and see where it goes from here.
I mean, I will say this, like, imagining a world if we did have a new administration. I mean, I can think of 4 or 5 things that if they just changed, and like we're fundamentally sort of in the middle, not even, we'll say, like totally, in the crypto camp, would just, make doing business in the US so much easier and so much, I think there's so much innovation that's been tamped down because people don't want to unveil products or do business here because they run the risk of this sort of gray area. So I think you're going to see a lot of excitement next week at the Bitcoin conference, because I think there will be a feeling that ideas that people have been working on and developing may now have a chance to go to market.
And end operation choke point 2.0, David, is that the theme? I'm sorry, I should.
I mean, look, forcing people to go offshore to bank crypto, I don't think the majority of people think that's the answer. I think there's a better answer, and there's a better answer that could be gotten to by consensus rather than just sort of crypto bad, don't bank it. Or we'll nail you in an audit kind of thing. I think there's a much more nuanced and reasoned approach to take that could get, us to the right place.
Agreed.
And, one thing I just want to mention, not exactly on the same thing, but as we think about what could be coming in the future and, what different administrations might be doing, my good friend, John Gaffney, who is one of my colleagues, he had just actually spoken recently about Treasury's new proposed U.S. outbound investment rules, which were just, the notice of proposed rulemaking was rolled out on July 5th. And that would establish a bunch of controls, like a whole framework for U.S. outbound investments that raise national security concerns interrelated to China. So it's interesting. This makes me think, I think that's really one to watch in terms of, because some of the exceptions are, I think that's something where people can provide comments actually for a period of time. There's a lot of clarifications that I think should be made or could be made based on my understanding from John, not because I'm independently knowledgeable about this. But it just makes me think also, David, about what you said at the beginning of the show about when former President Trump mentioned Taiwan, right? And the reaction with respect to semiconductors, because the 3 key areas, as I understand them, for Treasury's focus on outbound foreign investment restrictions are semiconductors, quantum computing, of which, we'll see what happens, and AI.
Yeah.
Interesting times.
That is interesting times. So looking ahead to next week, what, Josh, I think you're going to be down.
To be a downer, looking forward to the next week, and
look, I mean, I think, look, strategically, if the country has a view that there's certain products that we don't want to export and we want to have control over, that's our prerogative to do that. And so, if we do it in a thoughtful manner, I mean, it makes sense. I think the Taiwan issue is really big, though, because, I think some 95% of all the chips that are made, are made in Taiwan for, semiconductors. And I could be wrong, could be a little less than that, but at least the majority. So that's like a really big deal. And I wonder if we're going to start seeing more movements to build plants onshore here, so we don't have that sort of event risk like we had with COVID, when, because we weren't making as many things here, we couldn't get access to different products because they weren't made here. So I wonder if we may learn from that.
Hopefully.
Okay, so just a question. You guys might know or might not, and no pressure. But I thought that one of the reasons for which there hasn't been more semiconductor focus here domestically, not focus, but development domestically, is climate related. I don't know if that's actually the case, or if there's, maybe I'm making,
I don't know if it's climate
or topography related or something.
I couldn't speak to climate, but I one of the things that I do find interesting when we look at things like chip manufacturing and all of that is the source material for a lot of the things that are really critical to how the world operates are like things like rare earths, rare earth metals, for example, that if I read correctly, and I couldn't cite a source right now, sorry, the U.S. just doesn't have enough access to some of things like the rare earth. And shout out to Sonia, who put up a comment around it's just the cost. So I think there's an argument to say that some of the regulatory overhang makes it difficult for us to do some of these things. But I agree with you, David. Like, I think from a strategic perspective, it behooves any country to be able to near source some of the most important critical infrastructure needs that they have. But I couldn't speak to the climate stuff, Josh. It'd be an interesting perspective.
I see Sonia saying it is just cost. Which I defer to you guys. I did quickly Google it, and something came up that says, but semiconductor manufacturing requires vast quantities of water to keep machinery cool and wafer sheets free of debris. So I don't know if that is.
Well, there's also labor costs, right? And I don't want this to be a union bashing kind of commentary, but it is much more expensive to have qualified people build certain things in the United States than it is in other countries for a variety of right or wrong reasons.
Yeah, that is true. That is true.
I know, David, you and I have had deep philosophic conversations about unions.
Well, look, Oh, there's so many rabbit holes we could go down. We won't go. So talking about next week, I will be down at Bitcoin 2024, and I'm really looking forward to talking to people, seeing what's being built, and going on the and hearing different speakers. Josh, I think you're going to be there too, as I understand.
I'm going to be there. Yes, I'll be in Nashville at least, and Ron, I think you'll be in Nashville as well.
I will be there. WSBA is hosting and I'm sorry, the sun is like right here through the window, and it looks like I'm in a surgery light. Sorry. We're hosting a get-together of WSBA members and friends on the evening of Tuesday the 23rd. I'm looking forward to seeing both of you and a whole bunch of people there. I have the privilege, shout out to our friends at Bitwave, the hosts of the Electronic Digital Asset Summit in Nashville on the 24th. Pat White, Amy Kalnoki, and the whole team there. I will be doing a moderating session on regulation, which is going to be interesting. And I think they're plying me with food, so it should be, and drink. So that should be fun. I might be joining the Bitcoin conference. I know I have to be back by Thursday afternoon, but I'm looking forward to seeing both of you there. Hopefully there are no glitches in airline software.
Yeah, for real.
Oh,
I'm
goodness.
so glad I flew.
And air conditioning.
Yeah, I'm so glad I flew the other day and not yesterday.
I mean, it doesn't affect like private jets, though, right? I mean, David, you were cool. You had no issues with.
You know me, Ron. If I have to be somewhere, I get there.
You get there. I don't know how you do it, brother, but you do it.
But no, I think this is going to be great, and I think there'll be some interesting announcements. And I am curious to hear more about the strategic reserve idea and some of the other ideas on the platform that the Republicans have. So,
David, Josh, did I read correctly at the Bitcoin conference? Is Caitlin Long also speaking? We've had conversations, the three of us, with Caitlin at WSBA events in the past. I wonder if she's going to have some take on some of the work they've been doing to try to move, I think, the ongoing lawsuit with Fed. She's speaking there, correct?
I'm not sure, but I'm sure we could find out pretty quickly. But
I think so. I mean, she's at least going to be in Nashville because on X she does have some posts saying, "Hey Pete, see you in Nashville," and other sorts of things. And I would say Caitlin is someone who has been fighting the good fight
Oh
for
yeah,
a long time and is so smart and just always, you know, always full of very important information. So I'm excited for announcements for next week too. And I'm really happy that we'll be there. I guess we should mention also Sonia in the chat says Orodyne, is that how you say that name? Is doing some good work in this space, Bitcoin mining chips and other kind of chips to bring it back here. So thanks, Sonia.
Thank you, Sonia. Well, once quantum computing goes online, it'll all be a different story. Sorry, David.
So the last thing I'm going to say is that, you know, I don't want to be overly optimistic, but I will say that if there's a stream of announcements that are positive and we don't see a lot of Mt. Gox selling, you know, there is a chance we could, you know, get near the all-time high again by the time the weekend's next week. So I think it's going to be an interesting week.
I'm going to ask David to take out the crystal ball. When do we see BTC 80K, David?
Oh boy, that's a tough question. That's a tough question. I'll definitely say before the end of the year, but let's see if I can give you a more refined answer before.
Okay.
So my prediction, the only one I will make, which probably will be the last one I will make, is, I mean, I think it's really possible. I'm gonna say, again, not investment advice, but with everything in the mix, and with, as you guys have noted, the fact that some of the large selling pressures have not really moved the market that much. I think I'll just say it. Okay, next week all-time high.
What?
We'll see if I regret
wow. There you go. Look at Josh getting
David,
I'm instantly regretting that.
David, if she's correct, then that means drinks are on you and I for Josh next week in Nashville.
Listen, I think it is a possibility. I wouldn't foreclose on it. But I like Josh. I think we're rubbing off on Josh now.
You are in so many ways. I mean, literally, we started off with the jobless claims. That's definitely.
David, she's going to be reading the Fed Reserve Blue Book, Beige Book, as it comes out soon. We're sorry, Josh. We're sorry we did this to you.
You know what? I love it. I love it. I feel like I'm learning every week. So.
Same here.
Yeah, that's a great thing about this space is I feel like the things we think about or we may see but haven't delved into, and now because it's touching our space, that we really get a chance to go into it and just, you know, add to our wealth of knowledge, which is great.
Well, my friends, it's good to see the both of you. Josh, thank you so much. David, as always, a privilege. See you both next week. For everyone in the audience who joined us, thank you so much. If you had questions that we missed, email us info@wsba.co. Josh and David and I will do our best to answer them as quickly as possible. Have a great weekend, everyone. We will leave it there. Josh, David, I'll see you both next week.
Take care.
Sounds good.